Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. For today's video, I'm going to be explaining to you guys why I am actually taking a lot of leverage positions, why I'm going as long as I possibly can right now during this sell-off, and talking about how I believe that this is going to make me multi-millions of dollars by the end of this bull run. Now is an amazing opportunity inside the markets while the rest of the market is getting fearful, while everybody is beginning to panic sell waiting for $20,000. I'm taking as much leverage as I possibly can, maximizing the majority of my profit potential with my long-term portfolio, and I'm here to tell you guys exactly how I'm going to do it. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure you guys sign up and join the Discord server or download my free ebook. Links are going to be provided for you in the description for the people that would like to join and sign up. Lots of cool information in there that I know is going to help you guys out tremendously. So check it out. Links are in the description. And with all that being said, let's jump right into this amazing video today. Alrighty guys, so here we are to talk about the Bitcoin chart, and I'm going to explain some of you guys my thoughts, my trading plan, and perspective for exactly why I'm going long inside of this market. I'm here to tell you guys kind of what my reasoning is behind all of this stuff, and just kind of explain to you guys why I still believe that this Bitcoin bottom is going to be in and is really close to being in right now. Now, we did get a deeper pullback from my video yesterday that has taken us all the way back down to a low of about 35,341. Driving into the shorter time frames, we can kind of see what's going on here. We can see that we got this quick stab below support. We bottomed all the way down here at just under $35,300. And now we're kind of just consolidating throughout this period. Now, this has caught a lot of people off guard, including myself. I wasn't expecting a deep enough move like this. But at the end of the day, it's not anything too crazy considering the fact, like I pointed out in yesterday's video, we've been going through a lot of chop throughout this entire consolidation. And the big thing I want you guys to remember is the fact that we have yet to break support. And so until support has been broken, there's no major reason to get super scared right now, especially as we're getting closer and closer to levels that have bounced in times past. Now keep in mind guys that if we are going to bounce, we need to do it relatively soon. We don't want to see this thing go too low, and if we start losing a lot of the supports down in here, really this one over here, let's draw a line so you guys can see it. Right over here at just about 35,000, this is a level I really don't want to see us lose. If we can, for the short term, break below it with wicks, but we want to see us always break back and hold above this level. In my opinion, as long as we're above that level, as long as any sell-off that goes below gets bought back up to hold back above this level, I think that we're going to be solid to ultimately be breaking out of this low. This to me just looks like the same consolidation that we saw over here. A lot of the same sideways price action, choppy volatile action meant to basically shake you out of your positions. That's what it looks like. And I wanted to share with you guys another chart that I have because this same psychology, the same patterns are going to be repeated across market cycles year after year after year, shorter time frames, bigger time frames. It all is the same psychology, and that's what ultimately drives price. It's always the same emotions that are going to create these consolidation patterns, and it's so much like the 2015 consolidation, and this was actually when I first got into crypto. This was the first breakout that Bitcoin made. It ran up to about $450 to $500, and then I bought my first Bitcoin at about $450. This is when I first got into Bitcoin, and it reminds me so similarly to what we saw here. We've seen a number of these markets make this pattern. In fact, Ethereum made it in its most recent bear market. Cardano made it. Many of the other altcoins that performed really well in our bull run actually created this exact same consolidation pattern. Now, obviously, there is a difference here, mainly meaning the fact that this being a double bottom formation kind of happening at this point of a trend. Keep in mind that this is more of a short-term double bottom, whereas this one was taking place on a much greater trend. This was an entire reversal of a bear market, whereas this one's just going to be a reversal of a shorter time frame, right? So there is going to be some differences here that I want to point out. This one's going to be a little bit more choppy and volatile because of the fact it's a shorter-term consolidation. This one's a little bit more defined and consistent because, once again, it had a much longer amount of time that it consolidated, about 180 extra days right here. Now, the big point I'm trying to make is the same emotions and the same sort of psychology and the consolidation that we saw here, where once we make our first low, this is our first major capitulation after the original sell-off, we make our first bounce back up, we reject, and then we fall back down, kind of consolidate inside of this range here. And then we ultimately come back up to retest this resistance. This resistance becomes too great. We fall back down, and then we go for one more final capitulation that retests all the way back down to pretty much this range here. And the reason I'm pointing this out is because this is a pattern in which I've actually got stopped out of multiple times in years past. This is something I've actually seen a lot, which is why I'm actually drawing this pattern for you, because I want to teach you guys how to see this, because you are going to be able to see this on shorter time frames. This is just your classic example of a double bottom formation, and these are the sort of things that actually end up playing out. And I can't remember who it was. Somebody shared with me a tweet yesterday asking me what I thought about the potential of a double bottom formation. And they were kind of drawing it as this whole thing being a double bottom. And while I disagreed with that, I do believe that this on the short term is a double bottom. And the big thing we look for over here, and one of the things that always stopped me out when I first was beginning trading, was this second fake out right here. Because keep in mind, guys, we had this support right here. Right? This was this main support level, and everybody would have expected us, including me, to hold this, which I was talking about yesterday and the day before. Now, it would have been the same if we come all the way back down here to this point of Bitcoin, right? Where we draw this line over. This was our support. And so when we had this capitulation event that took us right below that, it was going to be a very choppy, a very scary, volatile time. In fact, if you were around for 2015 Bitcoin when it would have capitulated, made a new low like this after, almost a year plus of consolidation going sideways when everybody's thinking it's going to break out, I know that that would have been very scary. It would have been similar to the COVID capitulation that we saw in March of 2020. And so what we're seeing today, it is a little different. It's not quite as volatile, but it is very much the same sort of pattern that I wanted to point out here. And that's why, once again, guys, to further my point, why I'm going so long on crypto. Normally, I would not be the type of person to come up here and talk about leverage because I've always steered you guys away from leverage. I've always criticized different influencers that would shill their leverage trading links, telling their community to use their links and stuff. And while I still frown upon that to some degree, I am going into leverage positions. And while I'm not coming up here and saying that everybody else should do the same, I'm saying that you guys should do your own research. You should have a stop loss in place before you ever take a trade. You should be managing your risk, never investing more than you're willing to lose. When you're going into leverage positions, guys, the whole name of the game, it's kind of like using credit. It's like the credit system. I mean, if you're going to go out and you want to invest into a property, some people do, but as a rule of thumb, generally what you would want to do is you leverage your credit, borrow money from the bank, you buy this house, right? And then whatever your payment that you have to make back to the bank to cover your loan, you just pay that from the renters that are renting your house, right? And so you have this way to basically take out this loan, pay a small amount of money back to the bank without ever having to actually spend your own money. And so with leverage, it's literally the exact same thing. Now, you could be the guy that has no money, that has a low-paying job, that is planning to leverage the debt just to buy the house to live in. That's probably going to be a lose-lose for that guy, unless, he nails the right timing in the market. And you could do the same thing with leveraging with crypto. But the way that you leverage the market with profitability is you leverage a small amount of your money, amount of money that's not going to be a big deal if you lose it, and you take that and you say, okay, I'm willing to part with this. You take whatever that is for you. It can be any amount of number that you just feel comfortable with parting. Keep in mind that if we're breaking it down to percentages, I would recommend starting with less than 0.5%. And I use a fraction of a percent with my portfolio. I don't really need to do very much. So for an example, let's say I take $1,000 and put it into a position. I can take out, let's say 2.5 or 2x leverage and do a cross margin position. That is basically like me taking $1,000 without ever having, let's say I'm taking $1,000 of Bitcoin, right? Without ever having to actually sell my Bitcoin, I can instead use my $1,000 worth of Bitcoin, get an extra $1,000 worth of Bitcoin as equal collateral, and so then it looks like I'm holding $2,000 worth of Bitcoin, and with that extra $1,000 of Bitcoin that I took the loan out for, I'm paying just a couple bucks, maybe a few cents a day to actually loan that out. But as the asset price of Bitcoin is going up, I'm getting paid the same amount as if I was holding it as an investment in my portfolio. And so I have a lot of spot stuff that's just kind of sitting in cold storage. I can take some of these. I can actually borrow against them, use them as collateral. Let's say I have 1,000 Polkadot. I can take that 1,000 Polkadot. I can go use that 1,000 Polkadot as collateral. You know, I can get the same size position. I can get an extra 2,000, or I can get an extra 1,000 Polkadot and double up on that position. And I can pay a slight fee to the person that's actually lending me that money. And I can make a lot of profit by holding that long term. And I'm not risking very much. I don't have a liquidation price. I'm only risking a small amount of my personal money. And so even if there was some major flash crash and it wicked all the way to like 1 cent or something, which would be like technically that would liquidate you, I think. Once again, setting a stop loss would prevent that first and foremost. But like, that's the point I'm trying to make here. You can risk a small amount of your money. You don't even have a liquidation price. You have a stop loss in place so that if there was a flash crash, you'd get stopped out before the potential of it ever going back to 1 cent or 0 or whatever it is. And you can actually make a lot of money. And so with me going leverage long into the markets, the reason why I'm doing this is because I believe that this is the bottom. I believe that this is literally capitulation. And so when you're looking at these charts, guys, it's really easy to get caught up and hung up in the fact of the volatility, the emotion, seeing what every other influencer and person on Twitter is complaining and talking about. It's really easy. And one of the things that I wanted to point out to you guys is whenever we see markets that are consolidating, that are at support or looking like they're going to break support, it's always looking like they're about to fall off a cliff, right? If we come back to Solana here. Now, let's go back to where we were at with Bitcoin. So inside of Bitcoin's chart right here, this was May to the July timeframe when we were at this bottom. When we were sitting here, it looked really scary. As we were retesting support, everybody was watching the chart thinking to themselves, oh my gosh, it looks like we're going to fall right off a cliff. We're just looking right off of it right now. And they were right. We were looking right off of a cliff. Look at how many times we bounced off of that cliff. It looked just like we were about to break through it. And of course, there's literally no support throughout this period. And so as we were watching this retest support, everybody gets scared because whenever a market retests support, it always looks like it's going to fall off a cliff. It always looks scary. And that's always the best time to buy. And that's the time when nobody wants to buy. And that's just the way the market works. It's designed to shake you out and basically give you the good entries to get in, but you're going to be too scared to take them. And that's just average person in the market. Now, this is literally a 33% drop into no man's land. The next support we had was the previous all-time high. So as we were retesting this support level, it looked scary. Everybody was freaking out. Everybody was saying that we were going to fall. And that was just the way it was at the time. Now, if we look today, or if we look at Solana, same thing. We didn't have a support level until like 40%. So as we were consolidating here, keep in mind Solana was literally inside of a descending triangle too. So this is more of a bearish consolidation pattern, just from a technical perspective. This looked like it was literally just going to crash 40%. And then it didn't. And it bounced off support as Bitcoin bottomed at 29,000. And so guys, keep in mind that as we are looking at Bitcoin today, let's delete that. As we're looking at Bitcoin today, as we're looking through this consolidation, as we're looking at a number of different charts, and they look like they're going to fall off a cliff, let's go look at Solana for an example of this. Keep in mind, guys, Solana has never felt support here. This is, you know, we've maintained support once, twice, 3 times, and now we're coming back down for a 4th attempt. Once again, in the same way that Bitcoin back at 29,000, you know, a few months ago, in 2021, in the same way that it looked like it was just going to crash and fall, you know, 40% or whatever the heck it was, in the same way that it looked like that, Solana and the rest of the altcoins look like that now. That's what support always looks like. And so, once again, to further cement my point on why I'm going so leverage long, for the first time pretty much this entire cycle, I went leverage long pretty much at the bottom. I long Cardano at 5 cents. Man, what the heck was I longed Ren, I longed Raven coin. I don't even remember what the prices were because it was so long ago, but it was really early in that cycle, shortly after March of 2020 when we had the COVID sell-off. When everything crashed and started going back up again, I took really low leverage longs, maybe $500 to $1,000 positions. Once again, maybe doubled the position if that. It was really low leverage that I was using. And off of some of those positions, when Cardano pumped and went up like 25, 30x for my position, I made so much money. I made over 6 figures off of just that one $1,000 position. It wasn't very much money I initially invested. And that's why I'm telling you guys, you don't have to risk very much. You can make a lot of money doing this. And if you actually use the right kind of leverage, you're not being an idiot YOLO longing 50, 100x. Even using like over 3x is kind of silly. You don't need that. You literally don't need that. And you could take small positions. Altcoins pump hard enough that you can literally just print money throughout this period of time. And so, there's going to be the people that are screaming bear. There's going to be the influencers telling us why we're bearish, saying why they've already sat out in cash and why they're sitting here waiting for the time to buy. Of course, they've sold as we're getting ready to hit on support. And so I've seen this a million times. I've been in crypto for 5 years. I've been trading. I've been investing. People are going to doubt me at the end of the day, but I'm here going YOLO long with a lot of money in my portfolio. I don't advise anybody else to do the same unless you're going to do it. If you're going to do this, take leverage positions, risk a small amount of money, set a stop loss, and basically use cross margin. Use such little margin that you're never even going to have to run the risk of getting liquidated or stopped out necessarily, because it's, you might get stopped out, but if you're not risking very much, who cares? It doesn't matter. So once again, these are my reasonings. Wanted to leave you guys this update. If you found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these amazing videos. If you guys like what you see, you want to join the Discord server, download the free ebook. Links are in the description for that. For the people that would like to follow my trades, copy all my NFT picks, whatever trades and investments in altcoins, Bitcoin, stocks, commodities, things like that. Like I've stated in previous videos, I'm actually going to be closing off new entries into my video course and signals. That's going to be whenever I take profits at the end of the cycle. Obviously, that's a few months away still, so no need to worry right now. But just understand that at a certain point, I am closing off access to that group. I have no idea if I will open any more new people into the group. If I do, it will be all the way until the next beginning of the bull run when I'm back to accumulating long-term positions. So if you guys want to join, get in now, get in quick. It's going to be a long-term thing for me, so the people that are already in there, no need to worry. I'm still just going to keep doing my thing in there long-term. So thank you guys so much for tuning in. Once again, check out the links in the description, and with that being said, I will catch you in the next one. As always, peace out.